Do it. Okay, 5, 4, 3, 2, 1. 4, 3. Wait, what's this whole big announcement coming soon? Oh, yeah. Welcome to the Big Announcement Coming Soon podcast. I'm Michael Bull, joined by two hosts today, Jeff and David. Nick is away today. I guess he's off in NFT land or something like that. Great to see you all, gentlemen. We got a lot to talk about. The world is blowing up, according to my two co-hosts here. Of course, I never really believe it because I'm an old institutionalist, and these young bucks will just want that to happen so they could say, see, I'm right, as they run from the zombies. But anyways, Jeff, you were going to talk to us about some music today or something.
Oh, Faceman, who does our music intro, that's an NFT of his, and he's dropped another one. There's a few more for sale. I picked one up, and you can use it for anything you want, commercial, non-commercial. Really nice guy on YouTube, or not on YouTube, on Twitter. Actually, he is on YouTube as well. But if you like that intro beat we've got, you can check out Faceman's other beats. He's got new ones dropping.
Faceman, is he straight out of Game of Thrones or something, huh?
Yes.
Does nobody in your generation have a name anymore?
Aren't your generations like it's like William becomes Bob and Richard becomes Dick, and
right?
Why don't we just go straight to the funny name?
Well, how do you
get
how do you get Dick from Richard though?
Well, you have to meet him, and you'll understand.
Yeah, ask nicely.
Yeah. I didn't realize that was going to be a joke. What a way to start. Here we do this podcast at 7 o'clock in the morning, our time. This is different for David, of course. And we start with a dick joke. So thank you.
No worries.
Yeah,
it was your
financial
joke, so.
doom.
Yeah. All right. Well,
they're killing banks, aren't they? Still.
Yeah. Well, speaking of
as well,
my article is crypto is being banked. What it means for Bitcoin in the industry, of course, it's just pure clickbait. And basically it says that, all the signature bank and et cetera went down, yet crypto has thrived and gone up. We have, 1 month, maybe 2 months here of data. So therefore that's the trend, right? So it's just basically clickbait, but we're seeing the hype. Every article now is like, it's going up so that all the newbies or whatever will jump on. It'll go up to 60,000. We all sell and then it crashes for everybody. And we start the cycle all over again. So yeah, but with inflation potentially not going as crazy, and we're going to see the stock market at least rise today, then there's going to be more money out there, and people will be like, "Hey, let's put it in risky assets," and then we'll watch it jump to 30 or maybe at 32, which was David's prediction last week. So he's only off by about 10% a week. That's pretty good, maybe 12%.
Yeah, it's true.
So it's just the usual hype that just continues to tell me or remind me how ridiculous Bitcoin is.
Well, there's two different things. The hype is back as the price goes up, but as David said over the last 28 episodes, Bob Lucas in his 4-year cycle called this, and it's just a few of the Twitter accounts 2 years ago, Fu drew his lines up and it's matching. But people looked ahead regardless of FTX, regardless of Fu's a Bob follower. Regardless of Gary Gensler, the 4-year cycle's holding. So
yes,
and
the moon
has more powerful.
And also the sun has been rising too. I've noticed over the entire time. So it could be that the sun has this 4-year influence. Yeah.
Yeah. Well, yeah, exactly.
So that's a
good example. That's a good example. Yeah. So you should invest at the beginning of the good sun cycle in the spring, knowing that there'll be a good harvest at the end. It's pretty much the same thing.
Right. Yeah. So can we declare though that the crypto winter is over? It just actually maybe follows the regular seasons now that it's spring in some parts of the world, depending on which hemisphere you're in.
Yeah, definitely. Yeah, you could basically say that.
I have thoughts on it too.
No, I was just going to say, it's over essentially. Now we're moving into spring. Spring can be cold sometimes, like it is for you guys right now. Sometimes it's fine for me, but in general, it is warmer, and as it goes up, and then you go to summer, and then it'll come back to winter again in the end. And exactly, this is a good metaphor actually for how investing works.
Right, it's what the people think it's worth. The people who want to use Bitcoin on a larger scale, people who want to gamble on altcoins. But we've had FTX fail, Terra Luna fail, 3AC. Right, the list we don't need to go through the rest of the list, and Bitcoin went down. And all that happened, and then it stopped going down and it went back up. So the market's people thought, cool, that's over. We're not worried anymore.
Yeah, it's no longer winter.
A lot of stuff it's like Operation Choke Point, and it's still going up because the markets decided what they value it at, regardless or not regardless, but in this stuff happened, and we still value Bitcoin at this price.
Yeah, you also have to think like Bitcoin was valued at 15K when the entire crypto economy was collapsing and FTX was a rug and everything. And now none of that's happening. And so it's valued higher. So yeah, it kind of makes sense. But I mean, I think diamonds are a good example of this, right? Like we think like diamonds, how ridiculous. They're not even rare. It's just a huge cartel controls a whole bunch of them.
Mm-hmm.
And so therefore, and then you might be like, oh, and then blood diamonds happened, and that would have been the end for diamonds. But then they came back, of course, and whatever. So it's just marketing, right? So
yeah,
and you feel like everybody's wife owns a diamond of some sort, and it irrespective of whether it. I mean, I would say that's as ridiculous, if not more ridiculous, in Bitcoin, because you're buying something that you can't resell. Like if you try and go and resell your diamond, whatever it is, they'll just laugh at you. You get nothing for that. And so like it's like a car. You drive off the lot and you already will always lose value. Whereas at least Bitcoin, like, we're up like whatever, how many X and stuff, it goes up and down. So yeah.
Jewel. I'm sorry. What are you saying? You're saying Bitcoin is just more flexible.
Yeah, well, I mean, if there are plenty of things to invest in the world, Bitcoin doesn't seem to be a very bad one, given how many returns it provides. It's like it's like now 40% off the top or 50% off the top, but off the bottom it's like 10, 100 million, 1,000 bazillion percent. It's pretty good odds.
Almost 2x for the year, right? As we're approaching.
Maybe 32. It's over, or maybe it's gonna go up more. Yeah, I'm gonna take the odds on it.
But you had 100% gains in 6 months, or you had 3% lock-in of treasury bills. So the numbers aren't bad for the R&R.
Yeah, but that doesn't tell us anything. It just tells us that it goes up and down. So it seems if you can figure out, where the sort of the bottom-ish is, and if you follow the trends in the media of it's going to hell, now it's going to the moon, and it's probably you could just bet on that, just on emotion.
Well, there's the value of Bitcoin
that's essentially what's happening.
The value of Bitcoin in the market over time. And I think of it as a linear line up in value as people understand what it does, along with an S curve as people get excited and sad about it.
Right.
Yeah, exactly. Until you reach maximum, people using it, and then it will go down, right? So like any product, right? So you don't have saturation of the market yet. There's still millions and billions of people who still don't own it. So the betting against an asset of this type that has this kind of track record, given where it is in the trajectory of its kind of S cycle or whatever, it doesn't make sense to me for it to just kind of be over. If anything, it looks to me like it's like even more back, right? Because everyone's like, the religion is coming true, if you will. Because like what was happening, before, like what was interesting, like 6 months ago, we were talking about how Bitcoin follows the S&P, and you're like fully focused on that, right? And I said in March we would be higher, significantly higher than we were before. And we're like up 100%. Is the S&P up 100%? No, not even close. It's down from then. Like it actually is maybe equal to where it was in November. So it's kind of like you have to pick your assets. Gold, another one, would be a good one. Where, like, going to your article, Jeff, like that's where I would say true value is starting to be found again, because essentially betting on what? What are you betting on?
Well, first I would take it back to something you said a minute ago, which is diamonds always lose value. And we know, right, there's plenty of diamonds. De Beers holds that. But same thing with a lot of other jewelry. If you dig it up, the pieces themselves lose value. Gold as a speculative asset goes up and down. But what do you do with money? If you buy watches, my dad got us some nice Swatch watches a couple years ago. It's the last watch I got, maybe 20 years ago. The value didn't hold. I mean, I think he paid about.
Wait, so we're going to what you want to discuss. You want to talk about where to put your money in.
Rolexes hold, but I don't know how to buy those as far as a liquid asset and trade them. But yeah, that's what I wanted to talk about is holding your money. So a few things are happening. Central banks are buying more gold than they have in the last 15 years. And I don't have the tweet up. I'll put it up on the screen. They're looking for, what do you do with your fiat money that they've printed so much in the last couple of years? How do you hold value long term? The value of the dollar, again, right, gets traded against other fiat currencies. The yuan is being used, so maybe that value will go up. But I don't think anybody's holding currency without knowing they're losing currently 5% a year, right, with CPI at 5%. So it's always going to lose value. That's a promise. if you
Yeah,
hold
there's
gold,
always been inflation. You don't want deflation, so sure.
right? And so you can guarantee yourself a loss, or you can start figuring out other things that go up and down. Um, so gold, even as late as 1980, was 20% of all financial assets, and now we're down to about 1%, and that's countries using it as backing. The U.S. went off in the 70s. So as we've printed all this money, as people are stopping to use the US dollar as a store of value, like gold that holds value against their own currency for years, that is starting to be, do you want to use yuan? Do you want to be involved with the US banking system? And more countries have said no. What do? Do you buy Bitcoin? Do you buy gold? Bitcoin's a lot more liquid and easy to hold yourself. Gold has a lot longer Lindy history value. Do you buy stocks? But stocks and real estate, like David and you were saying, is that part of the everything bubble? And when is
assuming
real
that
estate
really
going
exists, but
to
yeah.
keep losing value or does it go up in dollar value? Because of course that's right. You have to start
So
playing all this against this.
Jeff, are you going to give us the answer to those questions?
I know, because I'm not giving financial advice, and I'll tell you,
I have
you
the
could buy
okay.
wine, you could buy watches, and a lot of people do, because once you own some stocks, once you own bonds, you own a house, and then you buy a rental property, you buy gold. People want to keep diversifying.
Yeah.
But
How
this
do
is
you
why they
find
have those
something that's not
free.
guaranteed to go down? And no, I'm not the person to be investing in wine. I'm buying Bitcoin. But I wouldn't take my advice on it.
Why wouldn't you diversify? Which historically has been the best way to go, on the assumption that we just can't time or predict the market.
Diversified into bonds, and stock and real estate.
Okay.
I'm saying,
okay, there you go.
When you look further, because those are tied up into the same similar financial U.S. markets, wine and watches, art. But I'm not going to start playing in those markets because I don't understand them well enough. So what do we do to hold value with our money? And the easy answer is pile into Bitcoin.
That's not the easy answer. It's probably one of the worst answers. That you should continue to diversify like you did in the past. Okay, so you don't want to do wine, whatever. But
what would you buy?
Real
After
estate,
you
stock, and Bitcoin.
30% stock, 20% bond, a house, and some.
Well,
Bitcoin.
this requires the premise, right? So let me bring in my article, because in a world that you're describing, Mike, yeah, of course you would just put it into passive index funds because everything goes up over time. But what Jeremy Grantham would say, who's Jeremy Grantham? He's like one of the biggest investors alongside Druckenmiller and these other guys. But he was in that documentary, actually, that I shared a couple of weeks ago, the money printing one, where he was basically telling us the truth about what was happening. He's like, yep, we're totally shouldn't be given this much money anyway. His premise is this. In the late 80s, all the way to, late 80s, more like in the 90s, and then 2000s onwards, especially 2000s onwards, you basically had a situation where interest rates got down so low that it may, and the stock markets were so liberal, and you could invest as banks, that it made way more sense for you to take loans out and then just put them in stock market stuff rather than putting in capex. So really, if you think about it like this, little dude comes into a bank and says, hey, I want to take a big loan out to build a new factory for my cars or whatever. And you're like, oh, cool. Okay. That's going to take a lot of time to figure out whether it's a good investment and price it and all that. And you may default. I could get the same amount just putting in the stock market. So they do that. And so for the next 20 years, and America financializes itself, and it becomes all financial, like huge, like Tesla, for example, we were talking about earlier, is worth like many, many times of what it's actually producing. P&E ratios is really what you're looking at. They're all like blown way out in terms of
price earnings, yes.
Yeah, price earnings. And so the argument is that everything is inflated because we just printed a bunch of free money for about 20 years and we just expect everything's going to be fine. But actually, the entire thing needs to come back down in value. And the way that works is essentially, inflation, right? Everything around it needs to go up and become more expensive versus the money. In order to bring it back into, because money is less worth anything. Like it's like right now, like you have money in the bank, it gets you 0% interest. It used to get you 5% interest. In the past, money was worth more to hold. Now it's worth less. That changes people's behavior. And as you start to see it, it moves into money market funds. It comes out of the banks. And as it does that, even less money gets involved in capex, expanding factories, things like that, driving manufacturing, driving your economy forward. Instead, you're just playing games in the financial system. So that's a huge mistake that's happened for a long time that needs to unravel. And so where do you put that money? Where do you put your money while that essentially like next 10 years of deflation or sideways, not deflation, but essentially like stocks move sideways as the economy catches up to them.
Yeah, but you're talking about this as if it's true rather than it's just a thought experiment.
Of course, yeah, but it is Jeremy Grantham
Okay.
saying that this is what's going to happen. So
so what? They say experts are right, less than half the time.
Well, sure, yeah. I mean, but we could also just believe nothing. Like I basically like search through like the best stuff and try and figure out generally what the best.
No, I'm not saying believe stuff.
is.
So you're saying there's indicators that are saying different things depending on what our individual biases are. Obviously, mine are the opposite.
Yeah, sure.
Look at
I guess getting down to what is you trying to say is the answer.
Look at the 92% drop.
Please don't say
year,
Bitcoin.
Though. Look at Netflix's 92% drop. Rivian. All these major companies where the stock dropped. Netflix kept making movies. It had a few less subscribers. It didn't have that many less. So the stock was way overvalued beyond what the company was earning every year. And now it's starting to catch up, whether that's stock holding price as inflation goes up, stock falling in price. But what I don't get before is stocks had to outpace inflation. And now it's catching up because people are it's not worth it. They're not worth what they're being sold for.
Coming back to the question, what do you buy? What do you buy in this circumstance? You buy gold. If you want to, if you're a believer, you buy Bitcoin. If you don't, then you buy Unilever, you buy Johnson & Johnson, you buy growth stocks. Like you buy ones that have real dividends, make money year on year, have gone up year on year. It's basically, he's not saying that the end of the world is coming, but he is saying that in the last 20 years, Mike, you'd probably be the best beneficiary of this. Your stock portfolio has probably vastly outperformed 8%, which is what all the numbers say it should be. Oh, just about 8% per year. But actually, it's probably gone up. Yeah, it's probably gone up way more than that, right? And oh, yay! I mean, maybe that's just an accidental happy time, or maybe it was vastly expanded than it should have been, and it should have only been growing at 8%, but we were juicing it with money, and as a result,
that's what happened.
And so instead,
we're just real quick. That's what happened with code, right? It went up way beyond 80%, but then it came back down to like a more normal average.
But the money didn't exit the system. The money's still swimming out there, and so that as it comes out of the system will contract essentially prices. So essentially, what will happen is we will live in a world where the stock market will be 4,000 now, and 10 years from now it'll be 4,000 still, like Japan's stock market. And no one has ever lived through that before. So people are like, how could that possibly? That's what happened in the 70s. That's what happened in the 70s, Mike. Just look at the chart in the 70s. From the 70s to the 80s.
Predictions.
I'm not predicting. I'm talking about what Jeremy Grantham is saying a guy who has done all this huge investing. So I'm not saying that he's right. I'm just introducing it as a possibility.
But Mike, on the flip side, you can't say you're predicting it goes up
critical.
More. Why do you think it keeps going up?
The so what is what leads you to invest more wisely in the future. So the idea is if you're passively investing in a stock portfolio right now, your stocks will probably go sideways for 10 years. That's fine, but you should know that, right? You should think about that as a possibility before doing it. And then if you don't that, then you think about what's the inverse.
Well, let's go back to the premise of, at least my premise or my belief, that you should diversify. So don't put it all in an index. Don't put it all in one this or that, but certainly don't put it all in Bitcoin.
Well, of course, don't put it all in Bitcoin.
So what are you guys saying? What are you guys saying is the investment? Do you disagree with the philosophy of diversification?
No.
Are we not arguing? I feel like I'm arguing here, but are we actually not arguing?
Diversification in our book means stock, Bitcoin, other assets. It doesn't mean multiple types of stock and then other assets. So when I'm thinking of buying Unilever or Netflix, and they have different, right? It's a different type of stock, different dividends are paying out. But in general, it's affected by the stock market and the liquidity that David's talking about, and Fed rates and how much printing happens. So when I think
you should also,
what's my other assets where the stock market going up and down? Because your premise is still, as David's saying, it will go sideways. You're saying, how do you predict it? But your premise is it will go up. How do you predict that?
Oh, I don't have that premise. My premise is the best thing you can do is to diversify, so that way, whatever happens,
but here's the question. What is diversifying? In the past, diversifying meant keep some of your money in the banks in 5% interest, getting a long-term deposit. Some of your money should be kept in stocks. Some of your money in bonds. You should buy a house and things like that. Right. And so now, let's say you're a boomer. You're a Zoomer. You enter the market. You can't afford a house. You can't afford, you don't know anything about stocks because you don't have any money to spend on those stocks. And so the mentality of the person entering is very different than it used to be back in the day, where if you put your money in these things, you will make it. versus for the last 10 years, you put your money in the bank.
I think that's still their mentality. You're just saying they can't afford it. You're just saying they can't afford it.
Same mentality at all. I didn't even think about putting money in the bank anymore. Like we used to. I remember when I was at school, we used to have a little bank, and I put it in there, and I'd see my interest go up and stuff. Like that doesn't exist anymore, right?
Too.
Yeah, but I
haven't kept money in a bank for 20 years either. Other than just the cash that needed to pay a bill.
Right. And that's what's interesting, right? Because that didn't used to be the case. And then you melded over time based on circumstances to be all in market, because that's what I guess savants told us to do.
Markets are free
and whatever.
Yeah.
And so we're being told what to do irrespective. But then the argument would be, when does that end, right? When does it come to the point where, so it used to be active investment was the way, and then it was like passive investment is the new future. Does that last forever, or is passive investing now actually reaching its end, where the money is so like we're just pumping money into it all the time?
Predict that's my whole point. Maybe it is.
But well, you can and can't, right? You can be ready for when things happen.
Ready
right?
for what?
So
That sounds predictive. You can be ready, and by diversifying, maybe shifting your diversification because you think this or that's going to happen. Though generally we're all pretty inaccurate.
Sure, you can be ready.
Which is why passive funds are so good, because the lack of trading is actually what makes you the money.
Yeah, absolutely. People should, of course, hold passive funds. Don't get me wrong. But you can be ready by things like,
I just think it
by like moving. Yeah, like everyone is getting ready right now. They're all moving their money out of banks because banks can fail, and they're moving them into the Fed funds rate. You see trillions of dollars doing this. I mean, this is a huge shift in our paradigm. So like you can notice things happening, and if the things that are happening in the market are vastly different than they're usually, like the charts are looking really different, you can just excuse that as I don't want to look at that, or you could take some notice of it. I mean, because it's important to do that,
yes,
because it does represent paradigm change.
You're making the assumption that you can actually do something that is going to help you, that you have some sort of insight based on those charts.
Of course.
I don't think we do.
Well, I mean, that's where I would differ, because
you have a short-term horizon of jumping into Bitcoin, right? But not other assets. Am I correct?
I bought the bottom, sold the top, bought the bottom, going to sell the top
on
again.
Bitcoin.
So three. Other calls.
But just on one asset. Now I'm not going to take that risk because I'm older. But a younger person.
Also on my housing, I have 2 apartments. Each of them has gone up since I bought them, and at a lower interest rate. So I trade successfully in different areas, and of course you should do that. But
so that's what, aren't we agreeing here? I'm not sure what the point is.
But you're saying diversify
within stock,
based on whatever people say to do. We're saying diversify because the world as it was written is changing, and we may need to think outside of the box because there are lots of different things happening.
No, I'm saying diversify.
Make you a lot of money. But you're not. But you said Bitcoin was ridiculous, so you're saying don't diversify.
The concept of Bitcoin.
Only diversify.
No. I'm not saying don't diversify into. Bitcoin is ridiculous in itself, but it is.
How do you diversify into a house if you can't afford it?
But I'm saying about what's the best thing you can do, not what you can.
Yeah, so the only thing you can do if you're a Zoomer and you're making like an extra $100 a week, maybe that you can save, is put it in the stock market. That's not my advice.
I would do that certainly as part of a diversification.
Well, sure. I wouldn't just throw it all you would take your only $100 a week, and you'd say put it in the stock market. That's
I said diversify. So
you have $100. What are you going to put it in?
Well, if you want to put 20 into Bitcoin, you can put 20 into Bitcoin and 20 into the stock market, and then 20 into the bank and 20 to put down for a down payment, whatever.
I guess, but like if you
run the
compound,
are you saying it's better?
You're putting into the stock market. If you're putting $50 into stock market every month, and you run that out over the course of a year, you come out with like 50 grand or something. And with inflation as it is, you're actually losing money. So it doesn't make sense, right?
Well, that's assuming it goes down and inflation doesn't, et cetera, et cetera. So
and you're making assumptions now, Mike. You're taking assumptions. Where I'm just
no, I'm diversifying. My assumption is that we don't know what the hell we're doing, and we should diversify. And if Bitcoin is part of the diversification, regardless of how ridiculous the concept of Bitcoin is, fine. But if it's going to go up and down, as you guys have charted historically, sure, make that part of your diversification.
So, but when you diversify,
I just don't understand what's changed.
Tesla? Would you diversify into Tesla right now?
No, because that's just one stock. I diversify into it.
But you have to diversify into it, though, right? You're saying diversify across everything. So you're not making any decisions on which stocks you're choosing?
No. Oh no, definitely, absolutely not. Because I do not have the ability to do that. I think most people don't. I think the vast majority of traders don't really know what the hell they're doing.
That's the rub, right?
That's why you're better betting the market than you are the individual.
I would say you're right 90% of the time, which is why that advice holds true. But for 10% of the time, people make extraordinary money. And
but I'm not in
the 10%.
I'm not in the 10%.
but let's get back to diversification.
You could be though. Like it's all about just learning. Like you just have to teach yourself how to do it.
I don't believe that. I think I think it's probably a lot more luck than it is anything else.
Let's split up that $100 again, though.
That's how they keep you down, Mike. That's how the man keeps you down.
But I'm not down.
Aren't you down on Bitcoin? You said that.
Oh yeah, but I'm not down. Like in life, I'm able to retire when I'm ready, when the time comes.
It's because you were born in a very good time where everything just went up only and they printed all the money, Mike. But we've got to survive in the new world. We have to take money out of the system. And everything's going down.
That doesn't mean you should chase it, put it all into crypto.
No.
Well,
I'm not disagreeing that things change.
20 of the 100.
Nobody said that though.
So of David's 100, if you bought 30 of Bitcoin, $30 worth a week, $40 worth of stock a week, you're at 70. That last 30, you can keep 15 in the bank. What do you do with that other 15? That's the question. Do you buy more Bitcoin? Do you buy more stock? Because you can't.
NFTs.
Sure.
It's got to be NFTs. Pandas.
Sure, absolutely.
I mean, pandas have done well, but it's that, do you buy more of the same thing, or is there another asset? And is there another liquid market that is an asset, or are you just picking more Bitcoin, more stocks, more bonds?
But this is the magic thing, though, right? It's not just where do you put it; it's how do you put it there. Like, so that's what's really been the change. People play with money now, right? We play money like we put stuff in farms, we buy NFTs with it, and we trade stuff. So that last 15% is I would say it's actively invested by people, whether it's on Robinhood with meme stocks or whatever it is. People are coming back as active investors. And it's interesting, like maybe it's lore that passive investing is the only way and people are too dumb to invest, but people I think are finding that that's not true anymore. And Peter Lynch from Fidelity has always said that, if you have passion for something and you have true knowledge of that area, you go deep into it, you can become an expert on it. It's more just if you read the front page, think you're an expert, and then just buy stuff, then yeah, of course you're not. But like,
I guess, but when you look at
you can become
maybe
knowledgeable about things.
Maybe, and we could say it's just so easy to trade stocks now because of Robinhood, et cetera, and that young people are like, hey, let's try it. That we have you're more
like,
risky.
Is Warren Buffett just super lucky or?
Yeah, but he's one use case. He's an outlier. The average
Charlie Munger or any of these guys.
Yeah, go ahead, name the numbers. But those guys are outliers, and the average person is not ever going to be in that category.
Okay. So there is a skill you can accomplish. It's just you think that not many people are smart enough.
I'm not actually. Well, when you look at the investors, like say the hedge fund managers, et cetera, versus the passive, they generally do worse over time. So where's the benefit?
It's possible, but it's either possible, and so very few can do it that you think it's impossible, variously speaking, or it truly is impossible and people are getting lucky. Which one?
I don't know the answer to that because it's hard to predict. You have to have a super long term. So I say within Warren Buffett's situation, you could say maybe it's possible for somebody like him who did it, or he got lucky. I'm not sure, but why would the average person want to take that risk?
Because that's how you get
other
rich.
option.
No,
and that's the other thing. There's no other option.
You diversify. That's your option.
Again, though, diversify into what? Like
into exactly what we talked about.
Nobody has any money. Like that's why. Like back in the day, it used to be easy to make extra money over time.
Why not go gambling?
There's no interest. All the stocks are going down. All the stuff is going sideways. Everyone's like, I can't make any
currently
because
that's only for the last year and a half, 2 years you're talking about. It's not. It doesn't portend what the future is going to be. You don't know what the future is going to be.
Well, okay, sure. But I mean, you can look at all the signs and say, okay, well, they came in, they had a huge party, and now we have to clean it up. Let's just have the party again. I mean, I don't think so.
Yeah, that goes
for a while, right?
That goes back to the theory that you think you can actually time and predict the future when it comes to economics. I don't think we can. And just because you've had success in one area for a little while doesn't mean you're right.
By definition, though, if you have experts like Warren Buffett and all these people doing it, then you're wrong. Like, I mean, you can do it. I think you're arguing just that you have to be super, super, super smart, and it's way outside of our ability zone.
Yeah, you need to be right like 55% of the time.
Right. And most of these, when you go back and the studies that they've done, and I can't quote them, I can just remember from hearing on podcasts, et cetera, is that the passive funds did better than the active funds.
Yeah, sure. Of course.
And the active funds are the guys who are the supposed experts.
Sure. Absolutely. And don't get me wrong. Like,
why would I want to not just simply bet the market?
In the past, when they basically just hosed money into the stock market, that's where passive always wins, because you just put money in and you just, as long as you're buying, you're going up. And if
you're assuming that's the reason, and you have a good argument for it.
That's a fact of the. That's the
fact
I know
where
the money went.
Goes in, but
the assumption.
How do we know that's going to
necessarily
change? Yeah. Well,
Because
that was the main reason I did it.
But Powell said it. They're doing QT right now, right? This is the first time they've done QT since the taper
what's the
tantrum.
alternative? Are you saying we should throw it into Bitcoin instead because it isn't attached to that? It's going to go down.
No,
just
I'm
like
saying
everything
you should consider becoming much more good at managing money and not just trust passive funds, because in the future they may not be as successful as they are now. And actually, in the world of today, we can actually notice quite a few interesting, I guess, arbitrage opportunities, crypto being one of them. These Masterworks, for example, is really interesting, where you can buy and sell like fine art in like groups and stuff like that. But like this idea of like getting involved in what your money does and not just trusting these banks that keep losing all their money and keeping everything down seems to me to be the future, rather than, because passive investing is just like, I trust passive investing. Okay, who's passive investing?
It's not passive investing. It's making a decision. Like I looked at it, figured it out. If I had done actively invested, I would have done much worse. I would have been pulling my money in and out all the time.
Yeah, but no one's saying that. The question is, who's behind your who's behind your passive investing right now? Behind those, like when you really get back to it, it's just another guy like me who just did a bunch of research on bank stuff. And so like you're not actually getting to people who are like super intelligent or whatever. It's really just, at the time, like all these massive Vanguard and everything grew so massively because they were hosing money into the system, and you could just the passive investment made so much money.
I get it, and you're saying ultimately, and we got to go because we only have a few seconds left. This time is different, and I'm like, sure, but still diversify, because I don't think we're smart enough to figure out what the difference is. And you guys may think you are smart enough, and you'll find out. One of us will be wrong.
Well, but the other thing is we are actually all diversified. We were always diversified. You're the only one saying that everyone's going all in on Bitcoin.
I want more diversification to new assets.
Maybe I'm not sure why we may be arguing about the same.
We should what we think we should keep part at Bitcoin in your portfolio, whereas you think it shouldn't be part of your portfolio.
No, I think Bitcoin should absolutely be part of your portfolio, but just realize what it is.
Oh, perfect place to end it.
Absolutely. There you go.
Thanks, Bitcoin's great. See you guys next week.
36.
33.